The single largest development for cryptocurrencies and blockchain technology happened yesterday, and nobody's talking about it. The DTCC, the one institution which handles almost all of American securities transactions, $4.7 quadrillion worth of volume processed per year, with over $110 trillion of assets in custody, took the S&P 500 ETF, took the QQQ, Microsoft stock, in partnership with JP Morgan, Vanguard, BlackRock, New York Stock Exchange. They tokenized them. It was their pilot program. Huge success, and they want to do a full tokenization service in October. Consensus Miami, during a conversation I had with representatives, they said themselves in 5 years, in 3 years, they anticipate their yearly volume, 3% of it to be on chain. 3% of $4.7 quadrillion split between public and private blockchains, blockchains like Canton Network and Ethereum. Huge asymmetric upside opportunity, in my view, for things like Ethereum and other blockchain technology, other blockchain providing coins and companies. I want to cover them in this update video alongside some technical analysis and developments in the realm of inflation. Stay tuned until the end. If you do end up enjoying this content, please do me a favor and destroy the like button. And a huge shout out to Lovex for making this video come to a reality. If you want to claim VIP level 5 status right off the bat by just signing up to Lovex using the first link in the description down below and save up to thousands of dollars in fees, check it out, sign up, email address and password only, and you can begin trading Bitcoin, crypto, and even commodities and stocks recently. The DTCC, they settle your Tesla stock trade and bridge the ownership and transfer of ownership from the exchange to your name. There are other intermediaries involved. It's a very surface level explanation, but for me, that was the best way of visualizing it to understand how important and how critical their job functionality is. In the archaic traditional financial system, transferring a security ownership between two different parties, it was 2 to 3 days. With blockchain, instantaneous, fees are much less, effort spent is much less. You increase the velocity of money circulating through a country, which pushes up GDP. It's a no-brainer. And only now, in the year 2026, have traditional financial, have TradFi woken up to this craziness and actually have begun implementing when nobody cares. Retail does not care. The asymmetric information upside comes exactly from that. We're in a crypto bear market. In a crypto bear market where blockchain is finding its full functionality being deployed, but since nobody cares, nobody even knows what is going on. For example, Chainlink is one of the partners that the DTCC is working with to bring off-chain data, Tesla stock price, let's say, and put it on-chain. Chainlink is doing the one job that it set out to do. In the previous bull market, Link was a promise. It was a story without any deliverables. Now they are delivering. We're down from an all-time high of $50 to $8.4. Huge. I think that is huge. So I'm very bullish for my holdings in Chainlink, and I'm increasing my holdings. Binance, they introduced B stocks, which amassed over $1 billion in assets under management in like 10 days. It is a BSC native tokenization system where they put stocks, commodities on chain. You get a one-to-one equivalent in the B stock variant that you can redeem for the actual one. You can put it on your BSC wallet. It's tokenization offered in the largest exchange, largest crypto platform globally, and BNB is at $577 below its all-time high. These are huge. These are really, really significant for me to say, look, Crypto Kid, I understand liquidity is a major issue. I understand that altcoin season may take its time. But while we're at these lows, while we have these confirmations from the fundamentals, I'm okay with allocating capital. So these are the projects that I'm buying up right now, aside from Bitcoin, and Bitcoin heavy, but I am accumulating these. Most importantly, Stellar, forgot to say Stellar, the DTCC made public one blockchain and one blockchain only that they would be working with, public blockchain, Stellar XLM. They listed the name Stellar XLM. They officially said they want to use Stellar's blockchain. We surged from $0.5 into $0.23 on the news. We're down to 18 cents again. Stellar is another big buy. And to end off, I mean, AVAX is doing a good job. They're number 4, right below Ethereum in tokenization. Solana, I'm sure I mentioned Solana. If I didn't, Solana. And Canton Network. Canton is a newer one. Canton does private blockchain solutions. The JP Morgans, the BlackRocks, they don't want all client data to be put out and about. They want to keep some information still private, which is not possible on an Ethereum, let's say. However, if you take the same way of working and introduce methods where some information is given to the people that needs to see it, think of ZK rollups, then voila, instant settlements, and you keep your privacy where it's due. I'm for fully public blockchains, and I'm for this tokenization amazingness to occur completely on our public blockchains. It's not a reality that we will face in the short term, maybe in the long term, but for now, Canton has built that infrastructure. It's seen 330 billion of tokenization happen on it. And we're down. We're down at launch prices. We're very close to the price of which Canton launched at. That should also be another good play from my view, at least for the long-term future. What do the technicals say? The technicals, Ethereum's technicals, falling wedge, rad resistance, we can get rejected from here. It's totally normal. As soon as we see the break to the upside, I would expect an Ethereum towards the 2.3, 2.4 areas. In the very short term, I'm eyeing $2,000. Bitcoin, July, end of July, near the 200 daily moving average. You guys know the reason for me saying what I expect to be is a Bitcoin at the 200 moving average. It's from the 2018-2026 correlation. Ethereum broke out of its W neckline. Bitcoin is yet to do it. Ethereum is the higher beta asset. It reaffirms Bitcoin's bullishness. These are the technical things. And in the short term, if we can breach with good volume, Bitcoin starts to punch into the 200-week moving average. We can even see an ETH at 2.4, 2.3. I have long positions on both. I'll reevaluate when to take profits, but I am in longs. If Bitcoin gets rejected into 57.5, I'll still be in those longs. I'm risk managed in a way where the leverage is super low. I'm okay to keep those positionings open, even if hypothetically we drop to a 57.5, and I would still be more than happy to remain bullish and long. We would reevaluate if this level was to be broken. And finally, before pivoting to our last point of discussion, inflation, President Trump is going to meet American senators today to discuss the Crypto Clarity Act. Clarity Act legitimizes tokenization, legitimizes crypto in our financial system. The administration running America right now is obviously very pro crypto because it's very pro their pockets. But if we see a Democrats win the next term, or we see the Republicans that come around not being as bullish as President Trump, you would have cemented the place of crypto and blockchain in America without it ever being able to get changed easily. So if this passes, then my bullishness on the DTCC and everything being on chain will go up 100x, and so will the people's, right? And that's when the potential upside opportunity diminishes too. So from now, I'm taking that opportunity. Can we see short-term corrections? Will altcoins correct? Will the ones that I said are good ones for me to be holding for the long term, can they reduce 30%, 40% towards October? Yes, they can. And they probably will. But I'm buying spot and I care about the long term. I don't care about the short term in bear markets. You cannot care about the short term in bear markets. It's just not the play. In the bull, yes. In the bear, different strategy, different ways of accumulating wealth. With that, producer prices fell to 5.5% below expectations of 6.2, normal. Crude oil determines a lot of inflation. When crude oil pumped from 67 into 98, $97, that was a 30-ish, 35-ish% increase, and 90 basis points of an upwards movement on the CPI was projected in our data sets. So now with a 30-ish% correction in the month of June, it's normal for these inflation figures to be plummeting. 5.5% for producer prices, still incredibly high, not enough to cut rates. This in August will be above 5.5% due to the recent uptick in global energy costs once more. From having a good chance of seeing rate hikes in July, we've now pivoted to keeping rates where they are. That's what I find to be realistic. Kevin Warr said that it's only one data point, these falling inflations, and he doesn't want to overread or cherry pick data. There might be some who look at this morning's figures and say, hey, the mission is accomplished and everything is swell. That is not my view. Rates should not be cut in the short term. Warsh actually wants to even keep the balance sheet lean. He doesn't want the balance sheet to expand. He's anti quantitative easing. Horrible for altcoins in the sense that we need to wait a long time to get quantitative easing and the expansion of the balance sheet to experience altcoin season. Like, really, I'm telling you, maybe by the time I'm 25 or 26, nothing in the short term. But as Bitcoin appreciates, as Bitcoin goes into the bull, some altcoins will give us those rallies just like they did in 2024 and 2025. The important step is to catch them and, at least for me, re-rotate into Bitcoin as my underlying currency, my underlying store of value. Thank you for watching. Take care, crypto kids, and I'll see you all very soon. Bye bye.